Hello there. Welcome to the weekly chat with myself and my good mate Ralph Hebgen, ex equity research analyst extraordinaire and all around genius. This week we're going to be talking about three things. Firstly, a major advance in the development of fusion. Secondly, and I'm not talking about food. Secondly, the reappearance of 100% mortgages, and thirdly, the ongoing problems of returns for apparel retailers. So let's go with the first one, the major advance in the development of fusion. I know this is one of your favourite topics, Ralph. So why not unleash your knowledge to everyone watching and listening?
No, normally you do an intro on these things. This is remarkably absent now, so I'm being put into the middle of it just immediately. So anyway, yeah, I thought it was very interesting to see. I mean, fusion is obviously a thing of the future, and we all hope that it's going to happen rather sooner than later, because we all need electricity. We can't really have it from Russia anymore, so we need to do something. All eyes on fusion, and we know that there are various technologies in that particular field. The one which is
Yeah.
now traditional, I would probably have to say, is something that uses a big reactor called a tokamak reactor. And
Hmm.
what I just briefly want to focus on is how that fusion actually works. Not in detail, of course, mostly because I don't understand it in detail, but not because we don't
You
have time to.
surprised me.
Yeah, okay. Well, self-deprecating comment. Of course, I know how that's
Yeah, of course you do. Yeah.
how this works. No, anyway, but just wanted to focus on what the sort of fusion is in terms of its chemical process, what is being fused there, because that is something which I think is the novelty in this technology which we've just seen. So perhaps before I do this, the news flow was that there is a company called Helion. Microsoft has invested in Helion, and Helion, which is a company that operates fusion technology, has committed itself to generate usable electricity by 2028. And that is 5 years from now,
Yeah.
which is astounding. I mean,
Yeah.
it's not like 20 or 30 years into the future. It's 5 years from now, and it has committed itself to do that. So this is real, and Microsoft has invested real money in it. So we have a tangible news story here over a um, over a real workable time horizon, which is near term. So what happens in a tokamak reactor, as far as I understand it, is that two um, hydrogen isotopes are being fused. One of these isotopes is commonly known as deuterium, and the other one is tritium. Now, deuterium is abundantly available in nature. It's in seawater. There's a very simple, very cost-effective process by which deuterium can be produced, and this is also what everybody in the public space, in the public sphere, is always focused on and focusing on. This is, comments like, "Ooh, fusion is going to be the way of the future," because what we're doing there is we're just basically creating fusion from hydrogen atoms, and it's going to be a dawdle, and it's abundantly available. So that is true when we are talking about one of these elementary particles, that is deuterium. But the other one, which is tritium, is unfortunately the opposite of commonly or abundantly available. It's extremely rare, and it has to be manufactured in some way. It has to be mined, which is expensive, or the tokamak reactor have developed a so indirect way in which the operation of the tokamak reactor itself is producing tritium in the process. But the problem with that is that um, as this is being done, the material from which it is developed is turning radioactive over decades of the operation of the tokamak reactor and eventually will have to be replaced. And interestingly, therefore, in a traditional tokamak fusion reactor or fusion plant, we are going to end up with very similar problems than we have in traditional fission atomic power plants, which is nuclear waste. And this is something which I don't think people necessarily focus on. Which brings me now to this other technology. This is a third way in which this can be done. As far as I'm aware, there may be more ways, but I'm aware of the tokamak way, the other one which we discussed on the show several months ago, which is sort of this pellet laser ignition, and this new one, which is one which is developed by this company Helion. And again, focusing on the fuels which are being burned here, or well, fused. This is actually, again, a hydrogen isotope, which is the same one, deuterium, abundantly available, and it's being fused with a helium isotope, helium 3, not helion, it's confusing. um, it's not actually merging with the company.
Yeah, yeah.
So deuterium and helium-3. Now, helium-3, for those who are in the know, they're going to say things now, yeah, right, big deal. Helium-3 is even worse than T3. You can't find it anywhere, which is sort of true. But here is the trick. The company Helion, careful how I pronounce this now, have apparently come up with a way to produce helium-3 in a secondary fusion process. So the way this technology works is you have two fusion processes, a secondary one and a primary one. The secondary one is only there to produce the helium-3 fuel to be merged or fused with the deuterium isotope in the primary fusion process. So you have a secondary process where deuterium is fused with deuterium. What you get in the process is helium-3 and some energy, but not enough to actually produce meaningful electricity. That helium-3 you feed back into the primary fusion technology. Now you're fusing deuterium and the freshly produced helium-3, and what you get is again helium plus energy, and that is the energy we want. And there is even another thing which I just mentioned in passing. In this secondary fusion process, you also produce tritium. And this tritium will over 15 years decay into helium-3. So again, you might say a big deal 15 years from now, but of course, if we're thinking about this as a sustainable energy source for the future, then in 15, 20 years time, if this works, you have two ways in which helium-3, which is one of the fuels needed in the fusion process here, is being produced through much simpler fusion processes. So it doesn't have to be mined in any way. It doesn't have to be extracted from the natural process in which actually uranium deteriorates or decays in nuclear weapons, which is the major source of tritium today. And it seems to me, with my limited understanding of this, it seems to me that this is actually a way in which it, first of all, can feasibly be done. Second, no nuclear waste of the kind which are described in the tokamak operation is going to be produced. And clearly, the company itself must think the same thing because it has committed itself to making this technology commercially viable within 5 years. So I'm down for that. I think this is really interesting, tangible news flow. Very cool.
It's I think it's amazing. I mean, the fact that we've gone, the fact that we've gone from, uh, you know, it being something that happens like way, way in the future to this has happened now, and now for them to say, wow, we've got, this is going to happen in 5 years
Exactly.
is incredible. And it really is amazing. I think.
Yeah,
So, and this will probably give impetus to rivals as well, and it may well attract more money because
exactly.
um, investors will think, "Wow, we don't want. Wow, we thought this was going to be something, not for years and years and years,
Yeah.
but now, it's going to be a reality."
Exactly. I'm excited by it. I mean, if you
Mm,
follow the news flow on fusion technology, it's always been something like, "Ooh, there's a breakthrough here, which is all very cool,"
mm,
which now means that we are going to produce this stuff
mm,
commercially in 30 years' time
mm,
rather than 50 years' time. You're thinking, "Oh, all right, fine." I mean, but it's not really very interesting yet. This is in 5 years' time, and
mm,
it is real. It's not as if scientists say, "Oh, we might actually be able to do this in 5 years' time." No, they have committed
mm,
themselves, and
mm,
Microsoft has committed capital to it. Last
mm,
time Microsoft committed some capital to something was when they purchased ChatGPT, and we all see
mm.
how that's going.
Yeah,
So I think, yeah, I'm excited. Let's watch this space. I encourage people,
yeah,
if you have some time, like 10 minutes or so, on a tube ride in London or something, just check out on YouTube a video on how Helion describes its technology. It's really well done. The CEO explains it very well, and it's very cool because you also get some more information on the software and the computer technology which is enabling this particular engineering process, because that's another thing. This just would not have been possible 10 years ago because our
mm,
computing power wasn't fast enough, and you couldn't actually put the various processes together in a parallel way which
mm.
they have to be run in order to do this. So check it out. It's all good stuff. I'm excited.
Yeah, that's good. That's good. Brilliant. By the way, I'm not sure whether Microsoft have bought ChatGPT. So it's
No,
developed by OpenAI, which developed ChatGPT, and I think that Microsoft has invested in OpenAI. So I
that's
don't think
correct.
they've actually bought it,
No,
but they put a lot of money into
I
it. Let's
think
put
they
it that way.
invested. They bought 49% of it. I
Yeah,
think
I mean
uh,
yeah,
that is correct. Yeah.
yeah. Anyway, right. So let's talk about the second thing, which is almost as explosive,
Oh
right?
God.
Um, which is the return of 100% mortgages, which have
I mean,
been absent for the last 15 years. So this is pretty amazing as well, although not quite as amazing as fusion, but still, nevertheless. So
back in the real
the
world, we're talking about
yeah,
boring
yeah,
personal financial
the,
products now.
what are you talking about? It's not boring. But so anyway, so yeah, talking about the the massively impactful bastion of financial innovation that is the Skipton Building Society. It is about, I bet it's never been described like that before.
The
But anyway,
bulwark,
yeah, that's right. I'm really trying to
stronghold,
really, you know. Anyway, yeah. So they're
the
about to
most
launch.
moated domain of
Yeah, yeah,
financial
yeah.
fiefdom.
They're about to launch a new 100% mortgage aimed at wannabe first-time buyers. This
Yeah.
means obviously that you won't have to save for a deposit, and it means that it may well be, it may well be something that could be interpreted as being fairer to more people, because things like the help to buy, which still required a deposit, and people just save up a lot of money as a result of that. I just think that 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 was good in some way, but I think that certainly favoured people who had particularly access to Bank of Mum and Dad, and those who could get lump sums together relatively easily. Because, the fact of the matter is these days the prices of houses, price of property has gone up generally, and to scrape together a deposit of 10%, for instance, is just insanely difficult. So I think that on the one hand, this sounds like it could be fairer, and you could say that, well, what's the difference in terms of affordability? What's the difference between, say, someone paying 1,500 quid for on rent for something, or to pay, let's say, 12 to 1,500 quid on an equivalent property. Actually, no, you probably have to pay. It might be the other way around, but anyway, but to pay a big amount of money on a property, but you then have equity in it.
Yeah.
So I I personally think this sounds like it could be fairer, to first time buyers, because more people will be included in this. You don't have to have access to large lump sums of money, so it might be better. But on the other hand, there are risks involved. But what do you think, Ralph?
Yes, you're describing it very well. I mean, it sort of depends uh, on on your perspective. I mean, there are obviously two people in this transaction. One is the retail customer, and the other one is the bank. From the point of view of the retail customer, of course, this is better because you need to get on the property ladder at some point. This is still an important way in which to manage your lifetime finances. Of course, I was born in Germany and lived there for decades, so I know different societies as well where this is not held to be as important. But in England, this is absolutely part and parcel of lifetime planning,
Mm.
and you need to get on the property ladder at some point. Obviously, it is better for you to get on this ladder early than later. So if you do not actually have to have the liquidity, the cash to hand to fund a deposit, then this is obviously better for you. The issue I think I had with this when I saw this news flow is just the historical context into which it is embedded. Now, that's a fancy way of saying that I wonder whether it might ring alarm bells of a next financial crisis coming. So what I mean by this is this. If you look at the environment, of course, we all know what's happening. We have peak inflation, commensurately high interest rates, which feed into high mortgage costs for existing mortgage owners, and it makes new uh, first-time buying of property expensive because you need to fund a mortgage which might well now go up, is already at about 4% rate and might actually go up to 5%. Um, Now, the issue clearly is that uh, as this is happening, it is not just the consumer that is suffering, it is also the banking sector in general who finds less demand for mortgages as a consequence of this. And we have already seen that a lot of banks are now offering mortgages at rates which are very inexpensive, that they're actually looking very good at a time that base rates are something north of 4%, but find a mortgage which is 4%, when it's actually very good, it's surprisingly good. And yet you find this. And this is all done because the banks will need to actually generate demand for their product. And if the product is unaffordable because it's too expensive, then of course you lower the price. This is no different from mortgage than for any other product in the economy. And that is what we have seen already. Now we've seen uh, a change, a dilution of the security within the terms and conditions of the mortgage contract itself. Because previously, even at a lower rate, the banks would still demand a deposit, a cash deposit. Because from the point of the bank, it is obvious why they would do this, because the so-called loan-to-value ratio is less than 1. In other words, if I lend you 80 for a property which is worth 100, then my loan is fully collateralized by the value of the of the property. If I lend you 100 for a value deemed to be 100, now it is not collateralized anymore. And if my property now goes down from 100 to 90, then the consumer is in negative equity, which is bad for the consumer, but it's also bad for the bank because they actually now face the situation where they might not actually have, where they might not be able to recover their loan. That is sort of the safety cushion which a deposit offers from the point of view of the bank. And I'm finding it interesting and perhaps not alarming, but certainly perhaps moderately concerning to see that we are now facing a situation where banks perhaps are gradually allowing to erode the credit safety built into the product itself through the demand of a deposit. They're allowing that to dilute by saying, oh, we don't actually need a deposit anymore.
Mm.
There's more to this, of course. I mean, you mentioned one will need to look at this exactly how this actually works. If Skipton and other building societies and banks who might follow say to the consumer, okay, you have a track record of paying rent. I'll make this easy, like say 1,500 quid a month, and we are prepared to lend you the capitalized value of £1,000 in mortgage. That's the same kind of safety built in. It's just built in a different way.
Mm.
Now you're saying it's almost like the same deposit coming in again. You are capable of paying 1,500. We can see that. We will lend you uh, only as much money as will require you to serve us with £1,000 mortgage payment, and we can therefore be pretty sure that you are able to service that particular loan. The problem with that is that it would need the consumer to be um, to be responsible in the way in which they manage their savings.
Mm.
Because if the consumer now says, "Oh, cool, now I've got
I've
500
got
quid
loads of money.
more in discretionary income,
Yeah.
excellent. Then, let's go to Mallorca or Ibiza on
Yeah,
holiday.
yeah,
Like seats.
yeah.
Okay,
Yeah.
shows my age. Nobody does that anymore,
No,
right?
no one doesn't. No, no.
Yeah, all right,
No,
cool.
it's a bit,
But
bit old school. I'd say that. Yeah.
yeah, that joke.
Yeah, yeah, yeah,
But anyway, you know what I mean. So just squander my newfound wealth away, then
yeah,
obviously this is no good for the bank because now,
yeah.
sorry, this is not good for you because now you actually you don't have that cushion anymore either.
Ooh,
So long
I've got
story
an
short,
idea.
I think I think potentially I have a concern here by seeing a gradual development which is in response to falling demand in the mortgage sector. Banks are happy to first of all sell the product as too low a price, and second, dilute the terms and conditions. And where have we seen this before? Oh dear, there was 2008
Mm.
with the financial crisis. Now, I'm not doom mongering, that was a different thing. It was actually far worse. There were different dynamics. We understand this. Nevertheless, that is something which perhaps we see coming, another financial crisis in several years' time. Anyway, sorry, your idea. You had an
Yeah,
idea.
yeah. Well, I'll tell you about that in a second. One of the things, actually, like almost like an echo of financial crisis. Don't you think it sounds? This is interesting, right? Because it sounds like the sort of safety nets that were put in place after the financial crisis in real estate, with regard to loan to value and stuff like that, or they've been, they've been quite strict since then because it was, the mortgages and things were the cause of the last, were the main cause of the last financial crisis. But it seems now that they're thinking, well, okay, maybe things aren't as risky anymore, so we shall, um, we'll take on more risk. Now, it
Mm,
almost seems like this is something that we've just seen in the banking sector. So it's almost like we're kind of almost they're letting history potentially repeat itself, maybe, because I think in the banking sector, there's been that trend of, oh, we've been too cautious for too long. It means that we've
Mm.
lost out on growth potential and stuff like that. So maybe we should make things a little bit easier on ourselves. And as soon as that sort of happens, then you get those two banking failures in the US,
Exactly.
instability in the banking sector generally in the US. So, is this gonna? I wonder whether this is going to destabilise the property market in the UK. I mean, and that sounds like a bit alarmist, but I don't know. I just think it's quite interesting that these two things that have been so conservative for a long time, for the main, because of the financial crisis, almost as soon as they're relaxing, something goes wrong. So I don't know. Nothing's gone wrong in the real estate market yet, but I just wonder if it does, is that going to cause a sort of ripple effects like we've seen in banking? Anyway,
Mm.
that's one thing. Another thing, though, is what about, right? So you're saying about, to stop people from going off to Ibiza. What about if they said, okay, you can have 100% mortgage, but what you've got to do is you've got to open a savings account with us and put X amount in this savings account. So in a way, you're kind of paying your, like a deposit as you're going along. And then that acts as so they could say, we want you to put in X amount, minimum X amount per month, up to a certain, let's say 30 grand. Thereafter, you're okay. So in a way, rather than putting your money in up front and then paying the mortgage, your mortgage put on a
Mm.
monthly basis, you jump in first. You're paying your 1,500 quid or whatever. Then you have a separate savings account, which let's say you're supposed to put in 300 per month
Mm.
until you hit 30 grand. Maybe that might be a way round. And then you've not only got people getting on the ladder quicker, but also you are effectively building up a cash buffer. What do you reckon?
Yes, I mean that may be a feasible way of limiting the credit risk of the bank while enabling people to get on the property ladder, because it's almost like a deferred liquidity charge, isn't it? I mean, basically, if you think about, I need to buy a property and it costs 100, the bank is giving me 70, and I need to bring 30. That's the old-fashioned way of doing it. That's the way
Mm,
with a deposit of 30. You need to find that 30 somewhere, and that's the liquidity which you have to have. Now, your idea is interesting. The bank would basically say, we lend you 100, the deposit requirement is 0, but you have to build up the deposit of 30 from the savings account, which means that you still have a charge on your liquidity. It's just not as big. It's whatever it might be, 100 per month or something,
mm,
and so that allows you to build that up, and then we basically take it, because that's the key, which I just wanted to say in this. Savings account is fine, but it has to be something which the bank has a charge over. Otherwise, it wouldn't
mm,
work. I mean, if it's a savings
mm.
account and it's just your savings account, then you just basically, after 3 years' time, you take the money and go back to
Mm.
Ibiza with it.
For a really good holiday, like a seriously good
To
holiday.
go,
Yeah.
okay, I won't do it. Anyway, and and then so the bank needs to have a charge over it, and so that would only do for the consumer something, it's a halfway house between it. It's not 100% it is 100% loan to value ratio, sure, but basically that would then decrease over time as you build up the the equivalent of the cash deposit to be payable at the end of a period of, well, to be negotiated, let's say 3 years or whatever. And I think that might actually be a workable way around it. It will have to be built into the mortgage contract as um, a module, a component of that contract. So it's not going to
Mm,
be a free savings account. It's going
mm,
to be an associated savings account. I mean, this used to exist, though, perhaps in the UK, definitely in France, and I think in Germany, where you had to actually, in France, I think this is still the case. You have to open a term assurance policy. This works slightly differently, but the term assurance policy, which pays out the deemed value of the property if you die. And this is again additional safety for the bank, because if you die and you can't actually pay back the outstanding amount of the loan, then the amount of the life assurance policy would cover for that.
mm,
That's different, but it is another way in which the bank might lower the credit risk which it accepts. But
mm.
but your point is very interesting. I mean, I'm sure it could be structured in this way. It might actually work very well for the bank, because if it offers the savings account, which of course it would do, then what it also gets, it gets deposits in which it can use to lend. And
Yeah.
so
I
that
was
would
going to say,
actually
yeah,
work
it's
for the
useful for
bank.
them, isn't it? They can use it.
Yeah.
Yeah.
Well, obviously they would pay you. It would just work like a normal savings deposit if we can structure it in such a way that it maybe is works over a period of 3 years, and you can get a very good rate as a customer, let's say 5% savings rate, and that would work for you very well. Um, and it would work for the bank because it pays you 5% for in expectation of higher return from the
Mm,
longer term lending, just normal
mm,
plain vanilla bank business.
mm,
Interesting point. I don't know whether this is being done, but that would certainly be a way to perhaps arrive at a, well, to fuel demand in the property sector, help people to get on the property ladder, and at the same time lower your credit risk. But we
mm,
just have to be sure again that would be in the middle somewhere. The deposit would still be better for the bank,
mm,
so it just lowers your credit risk versus 100% a no deposit mortgage. A no
mm.
deposit mortgage is here in credit risk. Our new savings contract construction is here, and the full deposit is here. So it will be
I think we
a
should. I think
compromise.
we should. We should trademark this. We should
We
call it
should.
the Ralph and Peter mortgage. You know.
I love it.
Yeah.
Fantastic.
Yeah.
Yeah,
I think we need to do that. We need to do that. So
I
awesome.
like it.
So yes, having solved having solved having solved
Everything.
this problem, let's
Let's
go
move
on.
on to the next thing,
So let's see what else we can do.
which we will
Um,
also solve, by the way. I
yes.
have a feeling that we might solve that next one.
So yeah, so it was very interesting to see that ASOS had difficult or poor results this week, and they blamed the losses on the amount of returns they get. Now
Mhm.
the thing is, I have talked about this before on podcasts and whatnot. Um, that this is a particularly tricky problem for apparel retailers that sell online, and specifically and particularly for those who only sell online. So the story here is that you have, well, there's a number of things. One is that people just order a load of clothes and return a lot of them. Um, there's this thing that I keep going on about called bracketing, which is basically you order the size that you think you are, and then the one
Mhm.
above and the one
Mhm.
below, and then the idea is then that you will definitely get something that does fit you, and so you return the two that you haven't, that don't fit. Um, and then, I mean, there's another one called wardrobing as well, which is where you order whatever it is online. You go to your function, that where you are wearing
Yeah.
this said item, you come back having not, you know, taken off the tags, and had any drink spilt over anything, or ketchup stains or whatever, and then you return it, having used it for one night, and yeah, I mean, there's that. So I mean, all of these things kind of wrapped together has made it really hard, for some shops, not only to, in terms of sales, it's very difficult to know what their sales are because, at any one time, actually, their sales may be considerably less than they think they are because they're in the middle of being returned.
Mm.
But also, it makes it difficult to plan because you don't quite know exactly how much you've sold. So, yeah, what do you think about that then, Ralph?
Yes, I mean it's an interesting one because my wife used to work as a CFO for some of these online retailers, and so I have a sort of like an experience of her coming into the living room and saying, "Oh, honey, this is terrible. I can't control the cash because we got like 80% returns and this, that, and the other," and it
Mm,
was all a constant thorn in her side. Um, in terms of controlling the financial planning. And she worked for several of these. And so this is a uniform problem which they all appear to have. So it is a real issue in terms of financial control. Um, on the other side of the equation, where we look at the consumer, you've mentioned these two dynamics or trends, bracketing and wardrobing, which I find particularly well amusing, perhaps. So it's not
mm,
really amusing if you're the retailer, to be honest.
mm,
Um, where am I going with this? Oh, yes, of course. In addition to that, it seems to be almost like a fashion fad now to
mm,
just order in as much as possible. Not just bracketing, which is at least done for a purpose. I mean, you don't really quite know whether the T-shirt labeled as medium actually really is a medium from that particular brand. Maybe it's small, maybe it's large. So you do the bracketing, and that sort of makes some sense. But if you look at some of the one of the sort of things which you see on the gram or on TikTok, it's almost as if people are encouraging consumers to just
mm,
order 10 of the things in, get your friends around and have like an online online retail party, so to speak. And and that is of course all a problem. Now, ignoring that particular social fad for the moment, and this is your idea, which I'm now going to take full credit for, by the way.
mm. Okay.
Actually, that would have made more sense if I hadn't told everybody.
No, I know. Yeah.
Yeah,
God. Ah,
yeah.
damn. Yeah.
Damn it!
Damn. God.
I
Yeah.
knew I knew I'd
Yeah.
bugger that up. Yeah.
Yeah.
Oops.
Yeah.
Right. Where was I with this? Yes. So the
Stealing my idea. That's right. That's what it
Yeah,
was.
exactly. The
Yeah.
technologies of AI might actually certainly limit or alleviate this particular issue, I think. We
Mm,
already have avatars everywhere. They look a little bit odd at the moment, but if you look at image creation generation programs such as Midjourney, for example, you know how good
mm,
these images are now. There is also recently,
mm,
independently, this is my second point. I've just seen that one supermodel, which I forgot who it was. They created something for her, which is basically an online clone or a virtual reality clone called a synth. And this synth is so good that it is actually being hired for events where she would otherwise appear in some physical shape or form. Obviously, they're not physical in the sense it's not a walk up. It's not like she's not on the catwalk. She doesn't. The event doesn't demand a physical presence, but it would be an advertising shoot or something where the clone is a stand-in for her. And it works
mm.
perfectly well, and people pay her money for this. Not as much
Sounds
money
like the
as
sort
for
of
a
thing
physical
Putin would do,
appearance,
isn't it?
if he only would. But no, actually,
Anyway, yeah. Go on.
I think, yeah. Okay, let's not go there.
No,
There's
okay,
there's
no.
there's something there. He seems to have lots of body doubles apparently.
Hmm.
But anyway, so she doesn't have to appear in person. These are paying events. The synth is good enough to do that. And so you could have a synth of yourself or an avatar of yourself, which is created for the platform. And to the depending on how good a reflection of yourself that avatar is, you would be able to then put the various clothes which you wish to test on the avatar. The avatar would just not be stationary, could walk around on the platform on your PC or whatever, interact with the environment, with virtual reality environment, against certain backgrounds, against certain spaces and environments, and it would pretty much, I think, create a, a virtually real life experience of what you would look like in a spatial context when you're wearing these clothes. Now, reality will still be better. Nothing replaces reality. So you still need to order these things. But if you are a normal consumer only interested in actually buying something which will fit you, rather than having a TikTok party,
Mm,
then this might actually be a feasible way in which online retailers could control the rate of returns they're getting.
mm. Yeah, I think so. I mean, I just think that some of it will be due to the fact because sizing is all over the place in every retailer. You know, you can be different sizes in even in the same shop because it's a different manufacturer. So I kind of think that if you had an accurate version of yourself
Mhm.
for the purposes of virtually trying on clothes and things like that, surely that would really help with returns and and reducing them because at least people would buy clothes that fit them.
Yeah, exactly. And also, I mean, if you think about this one step further into the science fiction future, everybody has declared the metaverse to be dead. Well, that might be one way in which the metaverse actually has a tangible commercial application,
Hmm,
but that's possibly a step too far for the moment. But you
hmm.
told me something else, which is some sort of GIMP suit which you could order from a.
Hold on right there. No, it was not. I did not term it as a GIMP suit. Just to let people know.
You
So
claim.
it was this. No. So anyway, basically, it was this Japanese company whose name I can't remember, fortunately. And I was told this by a very very reputable ex investor client of mine who said that it was a Japanese company. They were trying to make inroads into Europe, and what they would do is they would make clothes to fit you. So what would happen is you. So I did send off, but I didn't get anything, unfortunately. But anyway, they send you some sort of suit. I don't know exactly what this was. Maybe some like morph skin tight morph suit. I don't really know because I didn't get it. But you get that, and you use the measurements from that.
Mhm,
That then goes. You then input those measurements somehow, and then the idea was for this, for their rollout, European rollout, I would get a pair of jeans and a t-shirt from this company um, that was made for me. And I
mhm,
thought that was a really good idea because obviously
mhm.
it takes all the guesswork out of is this going to be too big, is it going to be too small, etc. And I thought it was really good. Now, unfortunately, they withdrew from Europe fairly quickly. I think they're still going in Japan. Um, but my point is that if you could actually have a way of making sure that where people could be certain that the items would fit them, I
Mhm.
think that would reduce returns dramatically.
Yeah, exactly.
Um, yeah.
I was quite taken by that particular suit, which I'm not going to specify
Yeah.
any further what suit that
Nah,
might
nah.
have been.
Yeah.
But that's what they use in Hollywood animation things. I
Mm,
think you walk around in that suit and you have various measuring points on your body,
mm,
which the camera detects, and then it's being translated into some form of animation.
yeah.
But of course, that can also be used to measure precisely your measurements, translate them into perhaps what might be called in the future a synth,
Mm.
and or whatever it might be, or avatar, it doesn't really matter. Some virtual reality representation of yourself. And it looks to me as if this is eminently feasible, and
Mm.
and that might actually be the future of online retail. I would certainly be very much interested in this.
Well, there you go. I mean, we've just done it again, haven't we? I mean, we're
Can I?
not only have we solved, you
No.
know, like the mortgages and things. We've only just gone and solved apparel retail. I
Look,
mean,
we have solved the energy problems of the
yeah,
world,
yeah,
the mortgage crisis, and the online retail financial bottleneck all in one half
oh,
hour episode. Now,
this is amazing.
we've got it
Oh, this is
going
mic drop,
on this show.
mic drop. And on
Can
that
I ask you
note,
one thing?
yeah, go on
You
then.
have this excellent t-shirt on,
Oh
which
yeah,
has got the. If I press
it's
there, does that
no,
actually shut
it's
you
not.
up?
No, so
It,
it's. Oh God, I
it
can't
doesn't
stand up. And
work.
it's got. There you go. So it's
It
not.
doesn't. It
It's
doesn't work.
no. They're sort of horns. This is a noble T-shirt.
The
Is
horn
the
suit.
is the name? Yeah, it's a logo thing. But
Yeah,
anyway,
I'm disappointed. I thought it was a
yeah.
pause button,
No,
which I
no,
get
no. I should
used
get one
to.
that has play written on it, maybe at some
That's
point.
excellent. Yeah.
But
I wish.
yeah.
I wish
Well,
people.
on the back, you could have one on the back, couldn't you? So yeah, yeah.
With the
Um,
interactive touch screen or whatever, people could stop me. I'm sure everybody is sort of constantly on their screen
yeah, it's
going to
like
try
yeah.
to, well,
I'll
how do I shut
just
this
shut
dude
up,
up?
Watson. Yeah,
Yeah,
shut up, mate.
excellent.
But anyway, brilliant. Well,
Cool.
on that note, I think we'd better end it there because I mean we're just solving too many world problems.
I know
So
it's amazing.
we need to leave some, because we can't solve everything in one episode.
In one episode,
But
let's
anyway,
leave
but yeah,
some for, I believe in 2 weeks' time, I believe, because I'm
yes,
going to be in Italy doing nothing at all while eating
sounds like good
mozzarella
fun.
and whatever else they have.
I
Pasta,
think they have quite a lot. Yeah, but anyway,
pizza.
yeah, brilliant. Anyway, thank you so much as always, Ralph. Always brilliant to talk to you. Thank you very much for listeners for listening, watchers for watching, etc. And yeah, thank you very much indeed.
Thanks, guys.
Until next
Lovely.
time. Bye.